And it's time now for an in-depth look at the global markets this afternoon. And for that, I'm joined on the line by Dr. Hwang Sei-woon, Research Fellow at the Korea Capital Market Institute. Dr. Hwang, thank you for coming on as always.
Thank you for having me with you today.
So after that big drop on Monday, Wall Street clawed some of that back, some relief over the China currency situation. Korean stocks, though, it was touch and go today. What's the story here?
In Wall Street, the stocks ended higher Tuesday, rebounding from their worst day of the year, after China's central bank indicated it wants its currency to trade at a higher than expected level against the dollar, easing tensions about the nations using its currency as a weapon in the trade war. Shares in Asia fell for an eighth straight session on Wednesday on lingering worries over the escalating U.S. China trade war, but losses and nerves were recovered somehow by White House assurances that it wants to press ahead with negotiations. Signs that China is stepping in to steady the yuan after its recent sharp fall also helped ease investors' fears of a possible global currency war. Japan's Nikkei slid 0.33% on worries that a stronger yen will put more pressure on its struggling exporters. Shares in Hong Kong were little changed after heavy selling in the previous sessions, but Shanghai Composite Index declined 0.24% so far. South Korea's KOSPI lost 0.41% today.
Now, as we heard a minute ago, the Japanese government's released the content of the actual regulation that'll take Korea off its trade whitelist of the some 1,100 strategic items. The question is, which ones will now require separate inspection to be shipped to Korea? What effect do you see this having on Korean industry?
Many of the Korean companies who are importing their basic materials from Japan will suffer from this export restrictions. The promulgation by Japan's Ministry of Economy, Trade and Industry will put the bill into effect August 28th, as the enforcement takes 21 days. The delisting of Seoul from its whitelist will likely cause delays on Seoul-bound shipments and a serious blow to South Korean tech industries that rely heavily on Japanese materials. By revising the comprehensive permit handling decrees, Japan can select only those items with high damage to Korea and low damage to Japanese exporters that can be excluded from the comprehensive permit and are subject to individual permits. The individual permits allows the Ministry of Economy, Trade and Industry to decide whether to approve their export application within 90 days, which may intentionally delay the review or to harass Korean companies in a way that demands documents to be submitted at the last minute.
Well, this issue is obviously having ripple effects throughout the Korean financial markets. So for that, the Bank of Korea governor and the finance minister held a meeting today to discuss that issue. What does the Korean government need to be doing right now to respond?
The Korean government will need to take swift and bold steps if necessary to help stabilize the financial markets. The country's economic fundamentals still remain strong despite many trade-related bad news from outside. However, it is pretty obvious that sluggish exports and investment caused by external conditions, along with poor business performance and Japan's export restrictions, are adding to difficulties. The contingency plan is expected to include such policy measures as stock market stabilization measures, the easing regulations on stock buybacks, and prohibiting short selling. The Bank of Korea will need to continue its market stabilization efforts while closely cooperating with government as well. The Bank of Korea could cut the benchmark interest rate before the end of the year, in addition to the foreign exchange market intervention to dampen the impacts from abroad.
All right, Dr. Hwang, we'll be watching those and any other measures to come out. Meanwhile, thank you for your time today.
Thank you very much.